Good morning. It's Tuesday, August 13th, about 6 a.m. Central Time. It was a great day in the metals markets on Monday, with platinum adding 2%, copper up 1.9%. Both gold and silver added 1.5%, and the gold-silver ratio, it hardly budged at 89 to 1, which isn't a bad thing right now. So taking it to the charts, you got to be aware if you're trading silver that copper and silver both peaked on May 20th. Both rallied into a higher low on July 3rd and 5th and have declined ever since. Their correlation is exceptionally high right now, so don't fool yourself if you're only looking at the gold prices and you're sitting there wondering why silver isn't reacting. It's because of that correlation between silver and copper right now, and the one common variable is China and the strength of their economy. Now, overnight, the precious metals are taking just a little bit of a step back here with a higher US dollar. Yields are unchanged, and everyone is focused on tomorrow's inflation data. Now, our global opportunity CTA, which is 40% metals, ended the month of July with a bang and was the third best performing CTA for the month of July, tracked by Autumn Gold. They've been tracking CTAs since 1994. Also, today ends our seasonal trade in the gold market that many of you put on last month. If you want to learn more about our CTA or precious metal seasonals, send an email to info@Blue Line Futures. Now, looking at the price action overnight, December gold down about $1.20, 25.02. Did dip below 2,500 at one point in the overnight session, and the high was 25.17, but that was much earlier in the overnight session. It was a lot of people chasing momentum after the market closed on Monday night. September silver down 20 cents at 27.81. Copper and also platinum just taking a small step back. Everyone's going to be watching that crude oil market, which was up $3 yesterday, and a lot of it surrounding the geopolitics, the escalation that's happening with Israel and Iran. A lot of people anticipate, and key officials, military officials, believe that Iran will start another invasion on Israel, or at least a bombardment with missiles sometime this week. So that did help boost that gold market. What percentage of the gain in gold and silver was correlated to geopolitical risks yesterday? I would say probably about 25%. So looking at the economic data here today, we do have the core PPI data. That's the change of price in finished goods and services sold by producers, excluding food and energy. They're anticipating 0.2%. The forecast from before, we saw the previous at 0.4%, so we're expecting a tick down. The PPI month over month is expected to be 0.2%, and then we'll see a Fed member Bostic. He'll speak here later on today. So looking at the CME's Fed Watch Tool, about 50-50 again at that September 18th meeting, where we'll see either a 25 basis point interest rate cut or a 50 basis point interest rate cut. The point is that the market is really pricing in a 100% chance that the Fed does make that first cut. Now, looking at the price action and taking it to the charts in the gold market, we did break out yesterday over that trend reversal point where we went from a neutral trend to a bullish trend, 24.82. Now I would anticipate that if we could turn green on the screen here, that traders are going to be looking at buying any kind of dips that they get in that gold market there, and then trying to sell price action at or above the all-time highs. Stochastics are still moving up, but haven't approached over bought territories. The average true range has come down to about $40, and DMI plus is firmly over DMI minus. Taking it to the silver market, silver needs to be more constructive on the charts. You don't want to see the price action slip, at least not below 27.50, and you don't want to see that market cross below 27 and 26.66. So you'll have three different warning signs there if you are long on the silver market. You don't want to see it retest the 200-day moving average. Your key level to watch on the silver market is going to be that August 5th high, 28.81. Markets need to trade back above that. Then they could start threatening the 50-day moving average and then also the trend reversal points. My thoughts to you would be to continue to monitor crude oil futures for the geopolitical tensions, the dollar index for any kind of weakness. Keep an eye on the British pound because of the fact that it's got a strong labor market. That's the one that I think, in my opinion, is one of the best performers on the charts as far as the foreign currencies, and then also continue to monitor Other metals, platinum, copper, silver. You see copper futures start to go up, start to go unchanged. Silver futures is lagging. Chances are that it's going to play catch up. You got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.